Good afternoon and welcome to another Fife Property VT video. So this week we're going to be discussing 2025 and why 2025 is set to be a strong year. But before we get into that and get you some statistics and facts, let's run VT. Do you know what that reminded me of? The whole way through. No, I was getting Monsters Inc. kind of vibes.
Ah, see, I was getting the mask.
I was thinking
Show my age.
Right. So 2025. Why is it set to be a strong year?
That's quite interesting because all the pundits just now are actually saying it's not going to be a strong year. You've got the doom mongers out there saying the property market's going to crash, like Robert Kiyosaki and all these different investors. There's a vested interest there. They want it to because they're ready and willing to buy stuff up. That's really why they're blowing that trumpet and putting that message out. At some point in the future, they will be right, just not now. It's a long way off till the property market has any jitters at all. It's still going strong, definitely. I mean, the UK housing market, Sophie, has always been subject to government policy announcements, I would say. Outside forces of economics, consumer confidence fluctuations as well. And after a turbulent 2024, there's evidence of 2025 will probably provide more stability and growth, particularly in areas such as Fife, where affordability is definitely there. And there's high demand still in comparison to what it was in 2019. And improved financial situations are coming together to create a helpful background for sellers and buyers alike, I would say. The thing that you've got to think about, though, is the easing uncertainty and the growing confidence. What can you say about that then?
Yeah, so if you think back to the kind of previous year with unstable interest rates, a kind of sluggish economy, policy overhauls, confidence is returning to housing. High interest rates and speculation over the new government's taxation policy created much volatility that kind of infiltrated the property market in 2024. However, with that kind of budget firmly in our rearview mirror, market forces are becoming somewhat more predictable. Now, the housing market is sensitive to that volatility, and this kind of certainty does breed higher confidence in buyers and sellers alike.
Yeah, I would say there was a news bulletin out today. What I like it, Americanized. There was a news out today that what a think tank actually says they're probably predicting another 2 interest rate reductions this year. I still can't see that though, so bear that in mind. But they're predicting this. There's still room for 2 interest rate reductions. So it'll be interesting to see where it takes us. What about things like national insurance? How will this affect things? Will it affect things? The new national insurance coming through, the employers coming through in April. Is that going to have an impact?
Potentially, because it may slightly reduce the hiring aspect of things, and then in turn, this is more likely to affect the kind of lower wage roles.
Yeah, definitely. It's actually quite interesting that you say that, because then obviously that affects overall income into the exchequer through taxation receipts, because there is obviously less jobs available. It tends to put pressure on wage rises as well, which we could actually see some people actually maybe doing maybe 1 or 2% this year. I have actually noticed that it's come down significantly over the year on year recently to about 3.4%. So I think that's still got room to still further drop. The problem is when you do a year on year 12-month perpetual rolling data, you've got 12 months ago or 11 months ago, you've got huge swings and they are still to drop out. So if you have that drop out in a month at 12 and then the month added, which is a lot lower, then it gives a significant jolt downwards as a result, or upwards, depending on how you look at it. So that's why sometimes people get a surprise about inflation going up or inflation coming down, because that kind of masks it in these numbers overall. So do we see? What about things like mortgage rates and that? Do we see this changing or anything like that? Do we see this coming down?
Well, if you think about it, taking it back to how hiring rates and then it will affect lower wage roles, you then have individuals that are maybe more likely to rent privately rather than to buy their own homes. And then you then need to take into account the broader housing market is likely to see major effects then as demand kind of remains strong. You then have house prices, which are shaped by those wider economic factors beyond just those changes in wage job numbers. Then that then links to the expectation of diminishing mortgage rates in 2025, which is a significant boost to this confidence because
it's consumer confidence. It's actually quite interesting that you used the confidence that people have, but a lot of the markets are actually derived by consumer confidence. I remember when it was. I've seen some markets with consumer confidence where maybe at a point in time there was a 6%. All of a sudden, 6% of the stock increase in the number of properties coming to market, and then it caused a crash as a result, because it was just a huge oversupply all at one time, and therefore there's a huge correction in prices in order to move that stock, because there was hardly any buyers at all, and that then caused an overall crash overall in the housing price market. It didn't really cause a housing crash in terms of the transactional numbers. It just meant there was an oversupply, and that caused a wee bit of panic for everybody, because they obviously need to shift their house in order for it. I can't even remember why that was or what happened, but it was way back in the, I think, early 90s in terms of where that happened. But it's interesting to see. What else can we say about this then?
So then if you take into account the year that's just lapsed, and it was one of volatility in which rates failed to decline as much as forecasted, there is that kind of cautious optimism today that mortgage rates for buyers with decent deposits will stabilize at approximately 3 to 3.5% towards the year's end. Now, just for a side note, you can get 4.1% with the Yorkshire Building Society with a 60% loan to value mortgage. But then even small reductions in the price of borrowing in the past have been found to kind of profoundly impact those transaction volumes, making that then a primary driver of the property market performance.
Yeah, it's interesting that you actually mentioned the 60% loan to value. Hi, Alicia from the USA tuning in from YouTube just now. It's interesting that you saw the property market and how the 60% loan to value mortgages, which have always been really popular with people that store a huge amount of equity in their property. It is one for a lot of people to actually bear in mind. If you've stayed in your property for quite a significant amount of years, then more than likely, or since 2019, then more than likely you might end up being on a 60% loan to value. Therefore, if you're sitting at a mortgage right now, it was based on a 90% loan to value in the first place, you should maybe revisit that just now, because the savings could be really significant now that your property has gone up in value in the last maybe 5-10 years. And there could be a better deal out there at this point in time, because of the optimism from the lenders in the mortgage market itself, I would say.
Definitely. So then when you then think the supply and demand imbalance of the property market, what would you say is one of the most fundamental drivers of that?
It, the one of the most fundamental drivers I would say out of this are the house prices across the UK. Is predominantly really the supply and demand imbalance. The UK's population, for example, grows predominantly through legal net migration. So legal net migration. In other words, people coming into the country legally. And adding approximately 1 million per annum as a result over the whole of the UK. Housing construction, therefore, has consistently fallen short of this demand over the last 3 decades. This scarcity really keeps house prices up and it keeps rents from rising, I would say, for that reason. I mean, Fife, like many areas, benefits from this dynamic overall, and the area is attractive to home shoppers looking for more, I would say, affordable homes than in the city. But supply is constricted because there's not that much house building going on. I mean, this thing about the UK government saying we're going to build 1.5 million houses over 5 years, and it's like, well, you've only built 150,000 every year since then, so you're going to double it, and we're at a point where we're at full employment, and you've told everybody to go back home under Brexit. It was helping out, so therefore you've got lack of skills for the people in that industry. So how on earth do you expect to build them? So I think this is to stay with us for a long time yet in terms of the imbalance in the supply and demand equation, and that will continue to keep house prices. I expected house prices actually to level off a bit, but they've not really. They've still continued to move up. Now, real-time data suggests that they will be leveling off. This is when the 12 months finally hit through, the 12-month year-on-year. It'll probably finally wear off towards the end of the year, and you will have a balanced market. But just now, you can see the data coming through from December and January, telling us quite clearly, for example, that Scotland's gone up by 5% in terms of property prices. In terms of rental value, they've gone up by about 5% again in terms of rental value as well. So you could see where this is going. And then when you get wage negotiation, if that's going to be higher than that or higher than inflation, then that adds to it as well, because people have more money in supply, therefore. And it's kind of like a spiral. It keeps going up and up and up, or it could keep going down and down and down. So you have to measure it all about. You have to measure it quite a lot and be almost accurate. But it is like a cruise ship. You know, once it leaves the harbour, it's built up momentum, and slowing inflation down, slowing economic activity down, or speeding it up takes a bit of time, at least 6 months of effort to find out if it actually worked, what you did in terms of your stimulus to either avoid or increase it. So I would say the constricted supply of homes for sale keeps the buyers competitive and competing for properties, helping to maintain those house prices even in the face of economic headwinds we see overall. How does that then equate, if I was asking you about this then, Sophie, how does that equate in terms of the resilience of house prices overall?
Yeah, of course. So despite periods of kind of, stagnation in the economy, house prices in the most parts of the kind of country have been resilient. The residential market is certainly different to commercial property, and we obviously see that ourselves. In that it is just a small percentage of the housing stock that is on the market at any one time. And when you think most homeowners are kind of insulated from kind of short-term price volatility, this then has an effect of keeping overall price levels on a kind of even keel, even when the economy is in a poor condition.
Yeah, that's what I love about Scotland in particular, and the resilience. The house prices don't seem to have huge swings in terms of the price volatility, whereas England's just all over the place. I mean, you can chart it on your usual curve, and we've talked about this before, but just for the benefit of other people listening in or watching just now that don't know this, but if you see the house prices from 1984, which is when records started for the house prices, sort of, it was actually kept in the Office of National Statistics. When you see 1984, the English one tends to go like that. You can see swings going up and down as it goes up over time. If you see the Scottish one, it's like it just levels out just like that. It's almost like a straight curve. You don't even see. I mean, you have to really look close in order to see any swings in terms of prices overall. So there is a huge difference for Scotland to England, and I think it's got a lot to do with affordability, definitely.
So then another factor to think about in supporting house prices is the long-held kind of perception of property as a secure investment option. When you compare it to other investments, again, that can be highly volatile. You know, bricks and mortar have always provided a solid return, making home ownership a highly attractive option for both homeowners and investors.
Well, you're talking to one of the
Yeah,
you're talking to an investor already over 30 years in the Scottish housing market.
prime example.
Dare I say one of the bigger ones. But I'm, you know, if anybody could show me anything in the long term which actually appreciates and generates more revenue than in the long term, and will continue to do in the long term. So in other words, extrapolating that, then I'll do that as well. But I'll tell you, I could almost guarantee everybody out there investing in property and in the British market, especially in Scotland itself and Fife itself, is a real good return on investment, definitely. So when we look at the supply and demand of the Fife property market, Fife actually still remains highly desired place to buy for those in need of decent schooling. I mean, you've got Madras and St Andrews, you've got Wade, in the Anstruther area and the East Neuk area, and you've got some really good schools over on Kirkcaldy and Glenorthus and around about, and over into Queen Anne and Dunfermline. So there's a lot of really good places overall, and they've got good ratings in terms of education as well. So there's no doubt about schooling. Transport links are great as well. You can evidently, most people do know about the area of Leavenmouth, and Leavenmouth's now got their new train station in as of just last year. That's been 50, 60 years coming almost. 60 years coming to get that train station back in. And now that's back in, that's got a direct connection. You just jump on that train and you get a direct connection into Waverley and Edinburgh. There's going to be a spin-off on that eventually in terms of demand and house prices, in terms of the Leavenmouth area and wider afield from there. As a result of that train station coming into there, I would say overall. But that's going to be about 5 to 10 years before that filters through, before you see any major signs of that. Although there's creeping through right now. It is one of the most popular places to buy right now, alongside Cooper as well, which is a really good place to buy as well. And I think it's primarily due to their proximity to East Neuk and St Andrews, respectively. So that's what keeps it going. So and they're all relatively affordable housing, and it's easy access to a mixture of rural and urban amenities. I mean, the top half of Fife is literally farmland. You know, it's an urban. And then you see the bottom half of Fife is industrialised to a degree. That's how it always was. And then you've got St Andrews, which is effectively the London of Fife, and then you've got the other ends of Fife as well, which is not the most desirable areas. But it all marries up in a mix, almost like a microcosm of the UK. So when things happen in Fife, I don't know if it actually reflects a wee bit about what's happening in the UK overall. Because Fife is a good example on a smaller scale of the whole of the UK itself. So that's a wee insight into there. I mean, the transport network is also a plus, particularly for wanting to move in the more expensive areas. Now, chatting with other estate agents in the Fife area, like myself, I've actually reported regular interest in homes for local Fife residents, as well as those moving in from distant towns and cities: Glasgow, Edinburgh, London, Birmingham, people moving up from up in the Highlands, moving down from Inverness into the Fife area, and it all adds to a nice mix overall. Not a significant amount of people, but people tend to live and move within the area they actually work. So that tends to be mostly what makes up for the people buying in your locality itself. But you do get the people coming from outside, and to them this is a fantastic price point, because you could stick one of your houses in the East Nuke in Glasgow, in some of the areas of Glasgow, and they would be double the price.
Absolutely.
And to us, East Nuke seems expensive. To people in Glasgow, it's like, wow, I can get that for that price.
Yeah, it's just loose change at that point.
Yeah, and it shows you then how that works. And a lot of people actually visit from the West Coast and holiday from the West Coast into the East Coast, into the Fife area, and they have been since they were children. Hence the reason there's a lot of nostalgia built up over the years of people wanting to finally just retire here as well. So it's a great area for retirees, I would say. So the affordability combined with the demand means that these markets are likely to be more robust as well, even more robust in 2025, even when national trends are actually fluctuating. As I mentioned earlier, though, both demand and supply play a crucial role in the property market, and supply is often a bigger driver of long-term trends. And if you don't build, it's just going to continue to keep getting more demand, because population grows. Net migration is 20,000 a year into Scotland. Legally, net migration is 20,000 a year into Scotland. So you've got 20,000 a year into Scotland. Scotland's meant to be building 25,000 houses a year. They're only building about 18,000 since 2006. So they're way behind as it is, and they've got even more coming in as a result of that. Let me just let you understand about people coming in. This is skills. This is shortage of skills. These people are coming in for that reason, because we don't have enough people here for these skills itself. So with that in mind, it's worth taking a closer look at what's happening locally to understand how housing availability, supply, in other words, is shaping market conditions. So let's look. You want to look at the number of homes for sale across the Fife area, and how it's increased in the last 3 years.
Yeah, of course. So say in the last 3 years, and this is for kind of KY1 to KY12 and then KY14 to KY16, just for reference. But in the last 3 years, in January 2025, there was 1,675 properties for sale in the Fife area. But if we rewind to January 2022, there was 944. So 944 versus 1,675. Now, this increase in the number of homes for sale is good news, as it does give greater choice for buyers out there, and it also encourages people to move, because there isn't a lack of homes to move to, which was kind of an issue in 21-22. However, some of you may say this greater supply of homes for sale could affect house prices.
Yeah.
But let me just remind the homeowners and buyers of Fife that back in 2008, so we're going way back, but back in 2008, there were more than 2,682 properties for sale in the Fife area. So we have an awful long way to go before we have too much supply.
That well.
Yes. Therefore, Fife house prices dropping like they did by 16 to 90%, depending on the 5 homes you owned. It's not something that we need to be concerned about, especially when you look at the 1,675 that was for sale in just last month, January 2025.
Yeah. Elisa, I've got your questions in there about renting and what you need. Leave that with me, and I'll answer them later on towards the end. We're just going to conclude with these numbers and where we are right now. So when you look at that, then, and you look at that overall, where does that take us then? I mean, what else have we got to? What else have you got to say then?
Okay, so looking ahead in Fife, while economic instability and policy reforms will continue to affect the property market, there's underlying demands that kind of remain strong, so that the supply and demand gap, your interest rates drifting downwards, albeit slowly, but drifting downwards, and ongoing popularity of property investing all points to a stable and possibly strengthening market in 2025.
Yeah.
So for prospective buyers and sellers in Fife, this year holds challenges, but also potential in the long term. It looks set to be a strong market, particularly in areas that enjoy a high ratio of that affordability to demand. However, this is not a green light for Fife homeowners to be unrealistic with their pricing, and that
I
is
knew you
something.
were going to say that. Yeah, I
It's
knew you were
something
going to
we
say that.
last week, the week before, the week prior, we could speak about this until we're blue in the face. No unrealistic pricing and have patience. That is two things that we will drill into you, especially when you think over the past 2 years, 81.9% of homes listed for sale in Fife have successfully sold with the owners moving. The remaining 18.1%, you may be wondering where they went. They actually withdrew from the market, so unsold, didn't sell. That is a percentage that not many people expect. That was 18.1%. So knowledge of the local marketplace dynamics is always key to making informed property decisions.
Yeah.
You need
I
to
would
have
say
that
so. I
careful
would say so.
planning.
If anybody, if somebody's coming, I mean, if you didn't have knowledge of the local market, how on earth are you able to value somebody's house?
Correct.
I think that's absolutely essential, especially when you come in to tell them what strategy you're going to take, because you would have to understand what type of buyer would be buying the property as well, and how to attract that buyer, and what tools you need to use in order to do that. Is it retargeting? Is it video walkthroughs? Is it just photography? Or is it creative content? Is it all these different things married together in order to get that that up and running and get the best possible start to your property? You only get one chance to make a first impression after all. I would say. So definitely that's that I would say you've hit the nail on the head about local market dynamics and how important it is. But again, I can't disagree with that at all, where you say you've got to have realistic pricing, and you also have to be patient as a seller as well when you're coming on the market, because we are finding more and more that people have houses to sell. It could buy your house. So you really have to go in. The skill and the expertise you're really after when you sit in front of an estate agent is how good are you at chain building? How good are you putting all that together to make sure that person buys from that person, who buys from that person, who buys from that person, can all sell their house at the same time, and that could all marry up from the same areas with different estate agents, because the potential might be in completely different areas of the country who use different estate agents to do that job. And it's getting that one estate agent to sell your house in Fife who will actually be able to manage that position. And it's pretty easy to do that, because I've got a track record in that, and we've got a track record in that already. So thanks for coming on, Sophie. I really appreciate it. We're just going to wrap up here, and we're going to talk to Alicia. Alicia, you've got 2 questions here. Let's see. I have a question or two regarding the getting a year rental as a foreigner who has no credit line in the UK. Let's say comes over to the UK, work visa permit. Well, work visa permit is obviously essential, and you'll have to show that and demonstrate that. You'll obviously have to show your passport, and you'll have a couple of forms to fill out with your financial circumstances. And yes, if you have a guarantor, if you've got a guarantor potentially in the UK, if you're coming over our work visa, that is a really good one, actually. If you're coming over a work visa and your employer is willing to be your guarantor, it's more or less a done deal, because the employer will be credit referenced as well, and they'll be a guarantor. And we've had this in the past, and it's usually just typically a done deal with the employer being a guarantor overall. So that's the way to do it. Besides your proof of income, get your employer on your work permit to be the guarantor, or somebody that's in the UK. It's of a healthy credit rating, and you should be okay, definitely. Hopefully that's giving you an insight into that. Again, thanks for coming on, Sophie, for everybody. And until next week's Fife Property Show, it's bye-bye from us. Bye-bye for now.
Take care. Bye for now.